Amazon's October Prime Day kicks off the day, hoping to lure shoppers with exclusive sales and deals. Joining us now is Mark Mahaney, Evercore ISI, head of Internet Research. It's your favorite stock among all of them, I think, Mark, but not necessarily for Prime Day, but because some of the other moves that the company is making really through like Prime TV.
That's right. It's our number one pick in large cap, in mega cap. We think we're going to have ongoing margin expansion both in the retail business and in the AWS business. That's for the company as a whole. I think free cash flow is continuing to improve, and we think we're going to see accelerating growth at their AWS segment and stable growth, kind of consistent, close to double-digit growth in their retail business. You put all that together, and we think there's a lot of valuation upside to the share. So yeah, we like Amazon right here, and Prime Day is just another feature of it. It's not a needle mover for the quarter per se, but it certainly helps, and it'll probably bring in more Prime members worldwide, which is always a win for Amazon.
In terms of operating income, how much does advertising represent right now?
Oh, that's a good question. They're doing about $50 billion now run rate in ad revenue. And they don't disclose what the margins are, but geez, it's got to be pretty high, Joe. I'm guessing they're doing almost 50% margins on that. If you look at what Google and Meta are able to do at that sort of scale, $50 billion a year in ad revenue. So that's $25 billion up to $25 billion in operating income. It's a substantial percentage of their overall profits, a substantial percentage. The two biggest profit drivers here are AWS and advertising. And by the way, the good thing for Amazon and for Amazon shareholders is the fastest growing parts of the business are the highest margin. It's called a wonderful mix shift.
Yeah, you make that point. So you can only estimate margins for the advertising side, and there's a lot more ads now, and there's a lot more content that's sort of. It sounds like NBC, but there's must-see TV, and the number of offerings are increasing, especially sports for Amazon.
I think, yeah, Joe, I think that's been one of the biggest kind of, I don't know, strategic pivots at the company. They've really leaned into being a media and entertainment empire is a strong word, but they certainly have a lot of professional content, licensed content, theatrical content. And then over the last 2 or 3 years, you've really also seen them lean into sports, and where you get these massive audiences, major reach, major frequency, and you get high CPMs. And just beginning at this year, they started layering in ads into Amazon Prime Video. It was one of the biggest unmonetized ad platforms out there, potential ad platforms out there. We think that'll help with profitability. In fact, it's probably the single biggest driver of ramping margins, ramping profitability at the company. The other one is on the retail side, they went through a major CapEx cycle in 2020 and 2021, and even in going into 2022. And now they've sort of been leveling that out. So you've got what's called rising capacity utilization, better usage of all this distribution centers that they may have overbuilt. But rising capital utilization, capacity utilization, there's another word for that. It's margin expansion. So you get these two kind of really nice tailwinds. Now, there's some headwinds here. They're starting to make a big investment in this satellite system called Kuiper. And but as long as they break that out and give us a sense of what those costs are and what they see as the revenue opportunity, I think the market will give them a little bit of the benefit of the doubt for that.
Do they have any businesses that would be recession resistant if the day ever comes where there's a slowdown? Because it seems like a lot of these things would be very economically sensitive.
Yeah, no, there's no recession resistance here, other than, there's a fair amount of their spend now that's what household essentials. AWS as a business is, kind of core to most companies. You need to keep the lights on. You need to keep your data saved up in the cloud, served up and saved up in the clouds. But the vast, I don't know what percentage of Amazon's retail business is consumer discretionary. I'm guessing it's north of 60%, maybe 70%. So no, if there's a real slowdown in consumer discretionary spend, especially given the size of Amazon, I mean, they're 10% of retail sales, about the same as Walmart. They would absolutely see an impact to their growth if there was a recession.
Okay. All right. We're going to end it there. Mark, what's your price target? I think you raised it, didn't you? Up to...
Yes. Yeah, we did. We're up near 250 now. We're looking on 2026 and 30 times, 25 to 30 times free cash flow gets you there. And We think that kind of multiple for a kind of a key, brand, an enduring brand. Amazon's going to be around in 5, 10, 15, 20 years. A name like that can do premium growth for a substantial period of time. We think that kind of multiple is well warranted.